Good morning, ladies and gentlemen. My name is Greg McCloskey from ForexLive.com. This is a morning Forex technical report for November 1st, 2022. October is behind us. By now, we all know that the Dow Industrial Average had its best percentage gain for going back to January of 1976. Last month into a new month, we're seeing stock prices move higher. We're seeing yields move lower. Why? China is reportedly mulling an idea to get rid of their zero COVID policy that would increase production, help to eliminate any sort of supply constraints potentially down the road, give a boost to the economies. Yields are lower sharply in anticipation that the move would increase supply and decrease inflation. There is the other side of the coin where inflation moves higher because of an increase in demand for commodities and goods from China, in particular oil prices, which are currently trading higher on the day. So there is a give and take. We have the FOMC meeting tomorrow where the Fed is expected to raise by 75 basis points and probably signal another 50 basis points in December and potentially another 25 basis points early in the new year. However, the expectations are that they will start to taper off their tightenings after that and keep rates unchanged for an extended period of time. Whether or not what that does to the economy, what that does to stock prices, so on and so forth, is still open for debate, but the stocks are cheering it on. And as I said, yields are moving lower as well, with the yield curve getting more and more negative in anticipation the Fed goes too far and they lead the economy into a recession. Again, what that does to U.S. stock prices, we will see, but pay attention to the technicals in those markets. So let's get into it. The technicals start by looking at the euro versus U.S. dollar. And with the risk-on sentiment, lower yields, and some buying in stocks, we are seeing the currency pairs like the euro versus U.S. dollar, pound versus U.S. dollar move to the upside. Actually, the dollar is the weakest of the major currencies. So taking a look at this currency pair from a technical perspective, we saw the opposite yesterday when stocks moved to the downside, and we saw the selling below this swing area and also below the 200-hour moving average. It's a green line in this chart near the low of the swing area around the 98 level, which is, let's call it 98, let's call it 0.99. We moved down to the 38.2% retracement of the move up from this low going back to September 28th through here. We moved briefly below that level, but then bounced back and sort of consolidated for a lot of the New York session yesterday, the U.S. session through here, below the 200-hour moving average. In the Asian session trading here today, we saw the price start to base against the 38.2% retracement and inched its way above the 99 level, and then the came up to the 200-hour moving average, found some sellers against that level on the first test, and then broke through the level. And as you can see, we've been able to stay above that 200-hour moving average as it moved to the upside, came down, corrected to it, and now moving back to the upside as stocks move to their high levels in pre-market trading. So we're not only above the 200-hour moving average, which is our barometer. It's oftentimes our barometer for bullish above and bearish below, but we also move back above this swing area through here, which is a bullish move as well. What we haven't done, of course, is move back above the 100-hour moving average on the top side. Moving back above the 200-hour moving average has the impact of increasing the short-term bullish bias, but there is more work to do with the 100-hour moving average on the top side as a target area to get to and through now. And if we can't get above that level, then we're sort of battling between the 100 and 200-hour moving average. That would make sense ahead of the FOMC rate decision, honestly. Let the rate decision decide which way we want to go. So I wouldn't be surprised if we do see further upside momentum, that we head up toward the 100-hour moving average, only to find sellers against that level, push the price back down. If we move lower, we might see something like that. So the price staying between the 100 and 200-hour moving average is probably a good bet, or something that you would anticipate as a trader. As you can see, we're trading right in between those levels. So the dip buyers had the right idea here. We'll see what happens from here for the price action, but they remain more in control. Let's take a look at the dollar versus yen. As mentioned, the dollar is lower against all the major currencies. It is the weakest of the major currencies, and we are trading back below the 100-hour moving average. Clearly, the dollar versus yen is reacting to the sharply lower U.S. interest rates, which have longer yen yields down double digits, and that is pushing the price not only below the 200-hour moving average, but now the 100-hour moving average. So unlike the euro versus U.S. dollar, we escaped from this area through here and look to have a little bit more of a bearish tilt to this currency pair. This comes despite the Federal Reserve and the Bank of Japan having diverging economic policies or rate policies. U.S. Federal Reserve is still expected to raise, as mentioned, 75 basis points tomorrow, and that should keep the dollar bid against the yen. But again, technicals can play a big role in this currency pair, especially at these potentially turning points where the Fed might stall their tightenings and the Bank of Japan may even think about putting a little bit more of a break on their monetary policy. So that can drive the markets, and we pay attention to the technicals as a result. So the buyers had their shot above the 200-hour moving average, and they failed. So the sellers started to take control, and now we're trying to push below the 100-hour moving average. We'll see if that maintains itself. Again, if the price were to move back above the 100-hour moving average, it would probably be, I would probably expect that the price starts to settle in between these two moving averages and wait for the Federal Reserve decision to make up its mind which way it wants to go. Let's take a look at the sterling versus U.S. dollar next. And if we take a look at the daily chart, what we know about this pair is we have this nice little trend line here where we came up, tested the top side of the trend line a number of different times in last week's trading, and then even in yesterday's trading got close to it, rotated back to the downside. We moved into this swing area through here, and we found that the price stalled ahead of the 114.04 level. Let's think about the 114 level on the downside as being an important level off the daily chart for this currency pair. Taking a look at the 4-hour chart, we can dig a little closer into the price action in the short term, and as you can see, there are a number of swing areas within this yellow area up through here. A number of different lows and highs through here. We broke above it here, and then tried to stay above it here. And in trading today, we came down, or I guess late yesterday, we came down and tested the low of this area before rotating to the upside for this currency pair. So found support near the 114.59 level, which is ahead of that 114 level on the downside, and we bounced back above the upper end of this swing area, a number of different highs and lows here at 114.95. So this level is a risk-defining level on the downside. On the top side, we have this area up here between the 115.98 and 116.20 level as an area to look toward. Would expect some sellers against that level, and if we were going to place the pound versus U.S. dollar in an area that would be a sort of a neutral area between in front of the FOMC rate decision, it would be in between these two yellow areas for that currency pair. So be aware and be prepared for that. Finally, let's take a look at the dollar versus Swiss. I'll take a look at the currency pairs during the morning. This morning, or the commodity pairs during the morning. But I want to take a look at the hourly chart for this currency pair. And if we're using our 100 and 200-hour moving averages as barometers for this currency pair, like the dollar versus yen, we're seeing the selling of this currency pair break below the 200-hour moving average and the 100-hour moving average. Get rid of those, make it more clear. You can see how the price in the current hourly bar and the last 3 hourly bars has used that 100-hour moving average as resistance, so the sellers remain in control in the dollar versus Swiss as long as the price can remain below the 100-hour moving average. That the bias remains to the downside for this currency pair with support down through here. Get below this swing area as well, where I'm sure there's other levels going back in time. but you can see the number of different times that the market came in within this area between the 119.17 and 119.29 level, move below that level, and the bias to the downside increases. Watch the 100-hour moving average on the top side for clues of any sort of bullish potential. Get back above that, we could start to settle between the 100 and 200-hour moving average, like some of the other currency pairs. So there you have it, a look at some of the major currency pairs. My name is Greg Mikulowski. Good fortune with your trading today. Bye-bye.